And today, I'm going to piggyback off of our Melanin Money episode that just dropped a couple of days ago. And I'm going to talk about the truth about passive income and how I lost $35,000 thinking that something was going to be passive, and it truly wasn't. What's going on, guys? Welcome back to another episode of Financial Freedom Fastlane. And you know the vibes. The quicker you get to your dream life, the longer you get to live it. And I'm your host, George Acheampong. So we hear all about passive income, and the thing that we think about, Carter actually stole my quote, by the way. People are trying to make money while they sleep, and they have not figured out how to make money while they're awake yet, right? Like, what allows you to have passive income is that you have strong active income, so much so that you have a good margin between what you make and what your expenses are and the excess capital reserves, profits, etc. Right? And so you're able to take that money, and then ultimately you're able to then go buy income. You're able to invest in the stock market. You're able to invest in real estate. You're able to invest in other things, right? That is what allows you to have passive income, is having strong active income first. But a lot of times people skip the steps, and because they're tired of working, maybe they haven't found their zone of genius yet, and they're burning the candle at both ends and trading a lot of time for labor. The exhaustion wants them to get out of that, and they're like, well, I want to make money while I sleep, right? I can get it. That's understandable. We all want that. That's the whole purpose of Financial Freedom Fastlane. However, we have to understand the order of operations, okay? The first thing we got to understand is that passive income is not truly passive, right? There's really no such thing as 100% passive, right? It might be passive on paper in terms of how it's classified from a taxation standpoint, but it's not passive in the sense that it doesn't require any effort. There's just varying degrees of activity, right? So naturally, if you're working a job or you're working in your business, on a scale from 1 to 10, that's going to be closer to 10. Now, if you get dividends from the stock market, right, that's going to be close to a 1, right? Maybe a 2. But what makes it not a 0 is you still have to think about portfolio maintenance. You still have to make sure that you get the form during tax time and make sure that things are appropriately filed, right? Boo-hoo. Wow, I know, like a lot of effort, but there's still things you have to do. You have to make sure that the company that you're invested in still makes sense, and still do your annual or quarterly research, whatever your cadence or frequency is. So it's not that there's anything wrong with trying to strive for passive income. I think we just need to have the proper context around what passive income really is. So let's get into my story on how I lost $35,000 thinking that I was about to get some passive income. Now, the good news is I did it the right way, right? You can do things the right way and still lose, but I lost voluntarily, and I'll explain why. So basically, I went to a mastermind event, and I learned about, one of the things I learned about was Amazon automation. Whenever someone, here's a hack. Whenever someone says the business model is X, Y, and Z automation, trucking automation, Shopify automation, Amazon automation, it's automatically bullshit, okay? Because nothing's going to be automated. You gotta ask yourself some very critical questions. If this person was so world-class at helping people start Amazon stores and make hundreds of thousands of dollars a month, well, why on God's green earth would they be charging me $35,000 measly dollars to set it up and then get a percentage of all the profit? Yeah, they might say things like Amazon has these rules and then you can only set up so many stores and blah, blah. And there might be some truth to that. I do think that there are people who are really successful at Amazon because Amazon's a very successful platform and they allow sellers. But what I think is BS is I think the person charging you $35K to set up your store only because they can't set up multiple stores, right? Now, here's the thing. I would respect it if it was just like, hey, we figured out something, how to successfully run an Amazon store. And in order for us to do it, we want to diversify our revenue, and we want to charge people a consulting fee to get it stood up, to get it set up. I could respect that, right? And again, I'm not saying that there aren't rules around Amazon and who they allow on their platform. All I'm saying is 9 times out of 10, people who are positioning that, they're making most of their money from that $35K lump sum that they're getting from people, and not the rev share that they're making from the platform. Because what they'll say are things like, well, our incentives are aligned. I only get paid if you get paid. No, you already got paid, bro. You got paid $35,000 to set up this store, right? And I don't feel bad about it because I didn't spend money that I couldn't afford to lose. Yes, I wanted to win with it, but it didn't work out in my favor. So why wasn't it passive? What happened? So the first thing that happened is that, and I'm gonna send you some screenshots so that people can see I'm not just blowing smoke here. The first thing that happened was that I had to do my part to like set everything up, which is fair, right? It's like, hey, you got to at least set some stuff up. So I had to get the entity, I had to set my Amazon store up. They provided me a walkthrough. It wasn't that daunting. And I had to just make sure that the store is ready to go. They were going to do all the research, pick the products, etc. Okay. Then after several months of not getting going, and I won't get into the details of what happened and why it took so long and the company got bought out and blah, blah, blah. Eventually we got set up, right? Several months later. Now, mind you, in order to sell on Amazon, you have to, because Amazon is all over the world and all over the country, I had to file this exemption status, and that wasn't passive, in all the states that we wanted to do business, which was all of them, right? So that took some time. I had to file this exemption status in all the states. Just because you're filing an exemption status doesn't mean you don't have to log into that portal of Tennessee and all these states to say, hey, look, this is how much we made or whatever the case may be, right? So I didn't know that. That wasn't told to me. So what happened was I paid to get the store started in July or August of 2021. The company ended up getting bought out or something, and then we didn't end up getting started until some point in 2022, which was a significant time later. And then once we got started, it did start rolling, but then we got shut down, right? But before we got shut down, I'll explain why we got shut down. Before we got shut down, I got a notice from the local tax authority of these states, basically saying, hey, you haven't filed. I'm like, I don't file my own taxes, right? So I'm thinking, I haven't filed. Well, what is this about? Well, what happened was you had to every single month let them know if you made money or didn't make money. But mind you, they're tracking it from the moment we established the relationship with the state, saying, hey, we're going to be doing business in your state, which was in 2021. So to my surprise, in 2022, I'm getting these notices saying I owe this money because all I had to do was log in and let them know we hadn't made any money yet. And we hadn't made any money yet because they hadn't started the store, right? And so all these months go by, and then what happens is they make this assessment, which is an assumption of how much they think you made and how much they think you owe. And I log into one of my bank accounts one day, and I saw that 25 or so racks was gone. And I'm like, yo, what's that about? And so I looked into it, and they basically said, hey, we sent you these notices and you didn't respond. Because I'm thinking it's snail mail, right? I'm thinking okay, well, they're taking care of it and we ain't making no money yet, so this can't be important. I was wrong. And so then I got to get all this mail. I got to dig out of letting the entities know and going back and the states know and going back and doing the filings and all this nonsense. And it was just a nightmare, right? But anyways, the store, ended up getting up and running. And I think our first month we were on pace to do 28,000 that month. So I'm like, whoo, okay, at least it was worth it, right? I didn't have to do anything. Now, truth be told, once I got past all the BS, I didn't have to do anything for that 28,000, right? They were ripping and running. They were doing their thing. I was just getting notifications. Boom, boom, boom. Amazon, 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 Amazon. I'm like, yo, I love Amazon. Instead of me shopping on Amazon every week, now I'm getting paid from Amazon. It felt like every minute, right? And that was good. But that was very, very short-lived because shortly thereafter, two major things happened. Number one, Amazon is a very strict selling platform and they can shut you down. So mind you, these are supposed to be the experts. And so now these people are drop shipping on Amazon, and Amazon shuts us down. And I'm thinking y'all supposed to be the gurus. Y'all supposed to know this, right? It's either going to be fulfilled by Amazon or fulfilled by us, meaning y'all did the research to know this is a quality product. Y'all buy the inventory and y'all ship it out from wherever we're shipping it out from. But Amazon, they tracked it. They got some secret shopper type scenario. And they don't like that because they want to maintain the integrity of their brand. Because here's what you got to realize. Even though we're shipping on Amazon and we're a third-party seller, the consumer is looking at it as Amazon. We're not looking at Joe Blow name who sells headphones on Amazon. They're looking at it like, hey, look, this is Amazon. I bought something and I didn't get it in 2 days. Amazon promises prime delivery or whatever the case may be, right? And so we get shut down. I'm like, great. But again, it's still early. I'm kind of excited because I'm like, well, we made money. This is working. Surely they know how to unravel this. So then they start to go through the process and tell me what forms we got to submit and what we got to do to get back online. And sure enough, weeks and weeks and weeks and weeks and weeks and weeks go by and nothing happened, right? Eventually, I'm getting notifications that apparently a lot of their other customers are disgruntled and they're trying to like massage the situation. And it eventually leads to them basically saying, hey, look, like we got to change up how we're doing things. Do you want to pay like another $10K for us to switch you to Fulfilled by Amazon and blah, blah, blah. I'm like, you got to be kidding me. I paid $35 up front for my store to not get going for like 8 months, right? Or probably longer than that, to be assessed a tax penalty because I wasn't properly instructed of my role in this, right? Then they have to go down the road of unraveling all that on these antiquated tax websites, right? And then to finally get started, it lasts for just maybe a month or so. And then ultimately getting shut down, then being asked to pay more money to get restarted. Boy, right? Now, let's move on to the other thing. So in order to run their business model, they have virtual assistants in other countries. And I'm not putting this on the other countries. People could do this right here in America, in our backyard, right? But what happened was one of the VAs that they had, because they're the ones running the store, my credit card is linked to the store. Like I had a Home Depot account, I had a Walmart account, because this is where they're buying the products. And they were able to get access to my credit card. And I'm seeing these purchases come from Walmart. I'm seeing these purchases come from Home Depot. But I'm thinking, okay, they're buying inventory, sales are coming in. I don't know, like, because it's supposed to be hands off. And sure enough, one of the VAs went rogue and was using my card to start their own little side dropshipping business on my dime. Good thing is with American Express, I was able to dispute the charges. That part was easy, but I'm just like, yo, insult to injury, check your people. So now I'm having to dispute charges with American Express, plus all the other nonsense, plus my store shut down, and they asked me to pay more money to get started. So at that point, I had to make a conscious decision. As my uncle likes to say, the sun shines brightest early in the morning. I should have known that this was not going to work out when it took 6 months plus for my store to even get started. But you know what? I'm resilient. And that same skill set that makes me a phenomenal entrepreneur also makes me a little bit oblivious sometimes to when something should be changed or I need to gracefully bow out. And so I had to make an educated decision. I'm like, okay, I spent $35,000. And there's a quote that you'll probably hear me say very often these days, is that how you incur your losses is not how you recoup them. Meaning, if I was on the blackjack table and I lost $5,000, it would be ill-advised for me to go back to the blackjack table to try to win the $5,000 back, right? If I am currently in the hole or this Amazon thing isn't working, it would be ill-advised to double down on the thing that's not working to try to get my money back. We have to understand we're not playing a game of absolutes, right? And at the end of the day, it's like, okay, cool. That didn't work out with that thing. I know that I believe in myself enough to be able to win in another way, right? Cut my losses and move on versus the mental bandwidth and the lie that I would tell myself that this is going to work out just because I'm like, man, but I already paid this, I was losing mental energy and space, worried about it. So what I did was I said, I'm done with it. I said, you know what? I don't want to pursue the new store. I don't care about y'all trying to get me reset up. I'm not going to go find someone else to try to get me set up. I don't care about the money that got locked into Amazon. I am done, right? And what would proceed, not immediately thereafter, but shortly thereafter, I've gone on within at least a 12-month period to have my most successful year in business ever, right? Now, if I would have been spending the mental bandwidth and energy on trying to recoup the losses, chase down all these tax filings, continue to keep this up, it probably wouldn't have happened, right? It probably wouldn't have happened. So what am I saying about this? Because I said that this is about most passive income isn't passive and how I lost $35,000. Now you know how I lost the $35,000, okay? Here's what I'll say about passive income. What I'll say is that I would focus first on becoming world class at something. And as a result of that, then I would be strategic about where I place my money and understanding the upside and the downside risk. Not being overly optimistic about what could go right and understanding what could go wrong. Asking the right questions, not just focusing on, man, I can make $100,000 a month from Amazon, right? And really making sure I know the true cost, i.e. the time, the mental energy, and everything else associated with it by doing this endeavor. That's the first thing I'm gonna know, right? The second thing I would say is I wouldn't be jaded off of something that doesn't go right, because that's the only way you can get in the game. Like if I get injured at the gym, right? Some people might say, well, but that's why I don't work out, because I don't want to hurt my back, or I don't want to tweak my shoulder. I don't want to. Okay, well, what's my alternative? To never work out, right? See, I got the workout shirt on right now. Whenever I wear a workout shirt in the video, just know that means I'm going to work. Nah, I just was planning to go work out earlier and didn't go yet. But I wouldn't let it get you jaded, because you still have to be in the game. I cut my losses. It is what it is, right? Like, I'll make that back in droves. I've made that back in droves in other ways, so I'm not losing sleep over it. But I would take inventory of what happened and how it happened, so I can use that as a guardrail and a parameter around my future decision making, right? And again, the truth is, I did it the right way. I have a successful business. I have a concentrated skill set. And I was just trying to find another way to invest my money. They didn't work out, right? Which is the third thing I would say, is that understand that no matter who talks about it, no matter how good the track record is, no investment is foolproof, right? So get out of your head thinking that you're going to be able to get in this game of investing and not take L's, right? The price for great investment returns is volatility. Sometimes that volatility can mean that it goes up, it goes down, and ultimately goes up. Sometimes that volatility can mean that it goes up, it goes down, and it never comes up. But as long as you're being strategic and intentional and thoughtful about what you invest in, and you're probably going to come out on top, right? I've made other investments in business or other bets in business that haven't worked. I remember like it was yesterday, my business partner, Kenny Conwell, we used to work at the same insurance company. We were in business for ourselves, but not by ourselves. And he was like, man, you never really talk about do you have any L's? Do you have any no call, no shows, deals that fall through or whatever? And I just smiled at him because our desks were beside each other. And I pulled out a drawer of all the people of the files that I had. It's going to date me a little bit. And all the voicemail jail, the deals that didn't go through, the people that never end up sending a check. I just know that I'm not going to focus on things I can't control. I'm going to put all my energy on the things that I can. So hopefully this lesson and me losing $35,000 is helpful for you in reframing how you should think about passive income, when you should think about passive income, and appropriately preparing for the realities of passive income, right? I still love investing. I'm not jaded off of it. I'll buy other businesses. I'll do other things. I won't miss a beat because I understand that comes with the territory. Thank you guys so much for tuning in to another episode of Financial Freedom Fastlane. And always remember, the quicker you get to your dream life, the longer you get to live it. Freedom is for sale if you're willing to pay the price. Peace.